Hello dear traders, my name is Oleg Prischepa, and in this video I'll show you the results of Libertex Noble Investment Portfolios. This service has started in 2013, and since that time it has already brought more than 1,700% of profit, and personally I've been investing in it since 2015, and I'll also show my personal investment results. So this service is available for all of the VIP clients starting from platinum status. To get more details, you should contact your personal manager. So let's get started from the theory. So these portfolios are based on the theory of Harry Markowitz. He is a very famous scientist and trader, and he received his Nobel Prize in 1990 for his new approach of investigating the markets. And to be short, his theory says that to get a sustainable profit with the smallest risk, you should find the assets that have the smallest correlation. It means that they are not connected one with each other, and they will not be affected by the same situations in economics that can cause the fall of all of the assets in portfolio simultaneously. To be simple, we should find the balance between profitability and risks in each certain case. If we look at the charts here, we will find that the main purpose is to find the balance between expected return that we have and also between the risks and volatility. So it's like the search of so-called the efficient frontier, the optimal combination of risks and return. So this portfolio has two aspects. First is moderate approach, and second is aggressive approach. So the first one is the approach which uses the leverage of 2 to increase the potential profits, and it means that you should have on your account at least $10,000 to get an access for this portfolio. And here we can find the results that were shown by this portfolio starting from 2008, and it's very important to analyze not only profitable years but also the crisis years like 2008. Also we have the drawdown in 2019. It was caused by the market's fall because of the former president of US, Donald Trump, policy in economics, the wars like trade wars with China that caused the markets fall. And if we'll see on the almost all of the years, starting from 2008, we had only 3 years closed with loss. But in fact, we still have very, very good profits. Like this year has brought us more than 25% of income. And if we speak about the risks, the annual risk is not if we speak about average risks, it's not more than 24%, and its maximum risk was 40%. So it means that you should have a good return with completely clear and calculatable risks, and you know what to expect from the market. So let's go to the next slide. We have the aggressive noble portfolio. This is the portfolio that I personally invest in starting from 2015. So this portfolio is available starting from deposit of $5,000, and it uses the leverage of 3. That's why it's more aggressive than moderate portfolio. And if we speak about the numbers, we can see here the numbers are much more interesting, and the drawdown is almost the same. So personally, this is the one portfolio that I prefer. And if we look at the profitability, we also can see that we have 3 years closed with loss, but all of the years except those one, they were bringing us very, very good profit. For example, this year has brought us more than 50% of profit, despite the situation that we had with corona crisis, lockdowns, and many other things. We still are in profit with this investment portfolio. So let's take a look at the assets that were chosen by this Harry Markowitz model of the assets that are not correlating one with each other. And I can say that this was the first year that our analysts didn't include the stocks into this market, because in autumn of 2019, they analyzed the difference between US treasuries. I will show this slide later, and they found out that the long-term investors, they don't really believe that the market will develop furthermore. So and that's why we were expecting the recession even before the COVID started. So in 2020 we had mostly portfolio made of commodities. Yeah, we have oil, CL, it's oil, HG, it's copper. We have also Nasdaq. It's the only asset that represents the stock market here. We have also sugar, we have gold, and we have palladium. And also we can see the profits that were generated by different assets. Pay an attention that some assets they have shown like almost zero profitability. In some cases it could be even a loss profitability, but it was compensated by the assets that have shown very good growth. And the other thing is that the positions that were opened in this portfolio, they were made step by step with several orders during 3 months. So it means that we were in some cases even averaging the position or looking for the best price to enter the market, and we are not risking by investing all of the money that we have simultaneously. So let's go to the next slide. This slide represents the difference between US treasuries. We have here like 2 years and 10 years treasuries, and when the difference is close to 0, it means that long-term investors are not sure in the future of economy. And due to the statistics that we can have, like starting from 1975, when we had the same situations, we were expecting the crisis like it happened before the dot-com crash in 2000, and when it also happened before the crisis of 2008. So we also were expecting this situation, but fortunately in this case we can see that the markets have started to renew very fast with no deep down correction. So speaking about the expectations and about that will the coronavirus get in the way, I would like to show you a couple of slides that represent the statistic of the left slide shows the daily new cases of new infected person, and also we have the daily death statistics. So if we compare those two, we will find out that, pay attention, that for example in April, when we had the first wave of coronavirus, you can see that there were like in total like there was the first wave, then we had the second wave, and now we have the third wave, and it's still going on. So if we'll compare the number of daily new cases in April, it was around, I think, like 40,000, like 40,000 new cases. And if we speak about the mortality rate, it was really very high. It was almost like 2,700 people. So it was a very big level. So if we compare now the number of new daily cases, let's take some average number. Let it be 250 k per day, but the mortality level is really not so high if we compare it with April. For example, in April we had let's say 40, and from 40k we were getting like 2,500 deaths, and now we have 250 cases, and the number of deaths has increased to like almost 4k. Yeah, So it means that now we have more people that are infected by corona crisis, but the mortality level is not so high. Yeah, it didn't increase in 8 times, for example, like it was if we compare it with the first wave of corona crisis. It increased maybe in 1.6 or 1.7 times. So it means that we'll see the coronavirus effects on the markets during whole 2021, but it will not be the reason why we should not invest, because like due to these numbers we can see that the markets are growing. The number of people that get the new statistics here, yeah, new daily cases also grows, but sooner or later most of people will face this illness and will stand against it. And now at least we know what to do, and the governments of all of the countries, they also know what to do. So we expect the next year to be also potential to make money on these investment portfolios. So let's get back to the MetaTrader platform. I will show you my personal account. Like, here is my account. I have started trading. Let me show you the whole history and filter it by the date. So this is the account. I have started investing in 2015. My initial balance was $10,200. I'll save it as the report for you to show the dynamics in time. So we had different portfolios during those years. Like, for example, the first portfolio, it included gold, included stocks, for example, stocks of Nike, stocks of Google, of Apple here, and for example, the portfolio of the next year, 2016, we had Apple, we have Starbucks, we had Google, we had Nvidia. Yeah, pay attention that we had Nvidia before the cryptocurrencies boom began. So we have made a lot of money on this company. The second part was here. It was the second part of this portfolio, and here we have the numbers of Nvidia. They have made more than like 50% of all of the income of our portfolio that year. The portfolio of 2017, it included also different stocks like Apple, Starbucks, Google, ITX, BMW, Nvidia, Amazon. We have closed all this year also with very good profits. The second part of this portfolio, also we have Apple, Starbucks, Google, Nvidia, Amazon, and we also can see very good profits here. Then 2018, we have also Apple, Google, we have oil, and also we have the numbers of like dividends for stocks, and also we have the correction on the expiration of contracts of oil here. It's also visible. We also have bought Tesla here. By the way, it was closed with loss, but then we have covered this loss. Then 2019, these stocks that you can see here, like they are almost the same. We also had Apple, we have Nike, we added Adidas, and we also included Cocoa to diversify the risks connected with the stock market's fall. And we had Google, we had MasterCard, and as you can see, we were opening these positions one by one. Like, they were not opened simultaneously. Like, some of the positions were opened at the start of February, some of the at the end of February, some were opened at the start of March, and it gave us an opportunity to have to get the average price that in our case was even better than if we were buying everything at the same price simultaneously. So 2008, the second part of our portfolio, we see that it was opened in April. And we have the short part opened in May. Then in June we were also gaining the positions, and in September we have also opened some positions to increase the profitability due to our strategy. So, and starting from 2020, so we can see the assets you have seen in the presentation. We have gold, we have oil, we have sugar, and we also have copper, we have Nasdaq, and we have palladium, and also we have all of the results here. So we, as I said, we also were opening these positions one by one. Like some of the positions were opened before the corona crisis, some of the positions were opened when it has begun, for example, on gold, but we were not opening the positions on stocks. So that's why all of these movements on the stocks they didn't insult our results. So here we have the position opened in August, and that's all of the information that we can see here. So the important numbers you should pay attention to is closed profit loss. Yeah, it's $55,000 for starting from 2015. It means that if we'll calculate all of the years 2015, 16, 17, 18, 19, and 20 for 6 years, I have made more than 50k trading on these portfolios. And here is the chart, so we can see the balance, how we were trading. So we had profits here, then we had a loss year. If you remember in the statistics, we also seen it that we had a drawdown like minus 24%. And if we'll calculate the maximal drawdown of this portfolio, like it was 49%. Yeah, so it is almost the same. And then we had like a couple of years with profit. So it means that like if you were also starting investing with me in 2015 with $10,000, by this moment you would already had like more than $60 of total money on your trading account. Like my balance at this time is $62,000. So I hope that you have enjoyed the presentation, and now you know how does this investment portfolio work, not only in theory but also in practice. Because you have seen my personal trading results, I will obviously invest in this portfolio next year. And if you want to invest in this portfolio with Libertex, please contact your personal manager or contact me to get the details. And I wish you to get the same profits. Have a good luck and see you soon.